resignation, just said, I can't do this anymore. 12 years with me and just said, I'm done. It's been quite intense, but we're getting a lot of kickback from owners. The government's come up with some sort of plans here in terms of trying to help people with regards to some processes to deal with tenants. Tenants have been forced, like everyone, to close their businesses, and some of them will probably never recover. It's certainly a challenging time, but I always like to look at the positive side of things, and I think once we get through this, it's probably going to be, as agents, okay, in the sense that people are going to be forced to transact and sell properties, etc. Leasing transactions, retail is going to be decimated, no doubt about it. But overall, I think there might be, and I'm saying selfishly as an agent, there might be some opportunity.
Okay. And what, the investment will dropped off a cliff as well?
So I actually sold a property last night. A nice little sale for us here. I'm talking Australian dollars, which is 1.1 million.
Hello.
And I've got another sale pending at the moment for about 4 mil. So, g'day, Bill. So there's still activities happening here. Certainly, the volume of transactions are not there, but there's still people in the marketplace, and money's cheap, and opportunities aren't there. It's either put money in property, the market, share market, or in the bank. And I think the prospects are that property seems to be the best option. How's everyone else finding it?
Yeah.
Good morning, guys. How are you?
Hi, Miguel. How are you? You okay?
Hey, Miguel.
Yeah, 6 a.m. in the morning, just for you.
Oh, 6 a.m.
Thank you.
Big sacrifice.
Did you just get in, Miguel, from the clubs?
Yeah.
No,
Miguel, did you just get in?
no clubs lately. All right, continue. I'll jump in as soon as.
Well, you can carry on if you want,
Everybody
Miguel. 'Cause what we're doing is just doing a round robin, just seeing how the market's going for everyone, how it's all been affected, and how you're feeling, how's business basically. How's your market?
Well, everybody's working from home. This is my 6th week working from home. Most of the industries are closed, just some essential activity. We as well, I was reading early by news this morning that the U.S. is pushing Mexico to reopen a few of these industries, especially those related to the aerospace industry, military work. Maybe Canada is in the same situation. The border between Mexico and the U.S. is closed, and most of the flights are as well canceled or closed. We are doing a lot of work, surprisingly, for 3PLs and logistic companies. We manage the Amazon account in Mexico, and we are opening warehouses as crazy, as well for other logistic companies, especially in the food and beverage industry. Other than that, investments, office, manufacturing is pretty much, nothing. I don't know about you, but I'm an economic guy, and for the latest 2 or 3 years, I was kind of worried because this economic cycle was just extending and extending, and I was kind of worried about a potential crisis or correction in the industry. And despite the effects of this pandemic could be really bad for many economies or many of us. The good side of the coin is that, at least for me, it was good to know that finally we faced a correction or a crisis in the industry. As everybody knows, the economic cycles may last 6 to 8 years. So as soon as this passes, I'm pretty sure the economy will pick up and we will be full of work. I strongly believe that the real estate is at the very front of the cycle. We are the very first to suffer and the very first to see the recovery. In Mexico, if the exchange rate continues bad, we will be also having a lot of investment because we will become more competitive. The only con in this whole complex scenario is that we Mexicans, we don't like our president. We don't like how he has been managing the crisis. And the guy is promoting to change the constitution and allow re-election. So it's a mix of feelings. And working from home is a challenge with kids and wife and everybody. So this has become a very interesting exercise. But anyways, we haven't killed each other yet. And my wife is not pregnant, so no more kids, no divorce, no killing. I have discovered that I'm not a social drinker. I'm just a drinker. And it's good to see you guys. This is my update.
Oh, that's brilliant. Thank you. I appreciate the personal bits. I think you summed us all up in one go there. I did speak to one of my mates who's a divorce lawyer. He's very, very, very busy at the moment. So
yeah, it is.
No surprise there, though. Well, I'll touch on the UK stuff, and Alistair, jump in when you think. But if we break it into segments, I mean, the investment world is pretty much stopped. There's a few bottom feeders who are trying to pick up some cheap stuff if anything comes through, but they're mainly monitoring all the serviced offices, which is obviously, the noise grabber. WeWork have taken a huge amount of space and deferred, and they haven't paid rent at all. And I've heard this across the board. It might be a global thing they haven't done.
Mm.
And but in theory, most tenants they should have paid their rent in March quarter day, but I can understand them not paying June quarter day. But we've been battling for a few on the occupier side for a few of our clients, trying to get some rent holidays or rent deferments. Or restructure a lease where you can add on a bit 6 months at the end, so they can get 6 months rent free or 3 months rent free now. So it's quite hard doing that. And on the leasing side, so mainly the office side, we are, that market's pretty much finishing now because there's no viewings of new stock. So we're frantically making videos and so on of property we've got, but. We've had a few RFPs, but, we can see a real gap in our billing, essentially, and our income for 3 months. And it probably goes across the board on leasing where, there won't be anything happening from probably May through to the summer, end of the summer, which is quite very worrying. And I'm sure that's the same across the board. Alice, have you got anything to add?
Only that just to expand on what you were saying about the serviced office sector, the little boutique ones are less of a concern at the moment, but the Notel, the WeWork and the Regis setups is causing some significant concern amongst landlords. We have come out of a situation whereby vacancy rates at the moment here are about 2.5%. So London's not got a huge amount of stock, but if you put some of the failures, the tenant failures in the serviced office world back into the pot, and then you add the owner-occupier serviced office guys who would then turn to conventional leasing, there is some research we've done that might bring that 2.5 up to over 6% as a vacancy rate within a 12-month period. This is without tenant failures as a result of coronavirus. So I think that would give that, as Daniel was saying, this might actually give some opportunities for us as a business. We've always done better in a bad market when our services are really required as a niche player. So there may be some silver lining, but as Charlie said, there's very little new transactional work in investment, leasing and acquisition. As a result of the lockdown here in the 23rd of March, that's going to give a gap in terms of income coming through. So we think that we might be back in at the beginning of June, hopefully, but it'll be a phased return to work. And we'll just have to see what the appetite from a fee-paying client is at that particular moment in time. There is no debt. All the debt that's available from the banks is going to save the businesses. So it's really the cash buyers who are going to benefit from building acquisitions, freehold acquisitions. And there's a lot of that money sitting in a war chest waiting to be spent at the moment. We've got a client with £1.25 billion that's waiting to pounce at the appropriate time. But if you're buying a covenant, there is real concern now is what is a good enough covenant, and is the pricing off the back of previous high rents going to be replaceable? So there's a bit of nervousness over that. It is a good time for buying adjacent properties. So we've got a team that's looking at client adjacencies where you can afford to take a risk to buy a freehold because there's some marriage value and there's some future gain to be had out of the property. But I think the summary is a relatively stagnant market at the moment, waiting for attitudes to be formed, policies, sellers, the institutions are likely to have to rebalance their portfolio by selling, and to what level pricing in terms of rent-free incentives and capital values is going to sit. The huge number of retail administrations, cafes, bars, restaurants gone into administration. So we're going to see a big transformation of the high street, no doubt. And finally, I think the one area that really is doing quite well is the industrial market, the logistics market, where there's been an increase in requirements for sheds and distribution places because of the requirement for home shopping and deliveries. Residential markets have fallen off a cliff as well. We've made it really attractive, or rather unattractive, for overseas purchasers by hitting stamp duty and taxes for overseas purchasers just at a time when the market really needs it. So there have been drops of anywhere from 10 to 25% in some prime areas for the residential market. So some quite difficult times for us ahead, but looking forward to playing a role in the recovery, whether that's later this year or next year. My feeling is it's probably likely to be next year.
Yeah, and our government's helped pretty well as well. We've had they've helped on on business rates or business tax on some of the retail elements and leisure elements, and helping businesses with loans, and also the thing which may be a global thing, I'm not sure actually, but furloughing staff, where we get a 80% of salary up to a certain level, which has helped. So obviously we've done that ourselves business wise, and unfortunately a few people have left the business as well. But we've had to look at all sorts of stuff to try and keep in business really, and cash flow until we get through all this pandemic. Alistair, is there anything else in the UK bit? Are you happy with that? Who else? Ian, do you want to have a crack? Let's go to Dublin.
Yeah, well, I mean, very similar in Ireland. The pubs are shut, so really life has stopped here. We're all in lockdown. Similar to, I guess, all of your markets, we're really just finishing out deals that we had. Closed very large office transaction yesterday for German money, so that's GLL out of Munich. So that was, again, interestingly sort of completed without really any aggressive price chipping off the back of COVID. I've another industrial portfolio hoping to close this week for Blackstone and M7. And again, the chip that we've sought there has been relatively mild. So at the moment, I suppose pricing-wise on the investment side, there really hasn't been too much depression, but similarly, the pipeline has all but dried up. Of transactions that we can see coming down the line. So we're certainly expecting to have a very quiet Q3. And hopefully we might see things start to come back Q4. Talking to a lot of the sort of more opportunistic investors, and also some Asian capital. Clearly, some of the Asian markets are starting to come out of lockdown. At the moment, most of that is very focused on picking up very high quality assets very cheap, and I would expect there is going to be a bit of disconnect between capital that's able to move and the prices at which people will be willing to sell. So we'll see how that folds out. Similarly, on the retail side, it's a bit of a car crash. A lot of tenant distress, very, very low collection rates in terms of rent. From the management side of our business, we are just doing a piece of work just to really try and target the insolvency professionals and banks who we think are going to find themselves holding retail assets potentially for very extended periods of time. What we've seen is that a lot of retail assets in Ireland are held by private equity, who would usually be the natural buyer for distressed assets. And what is happening is they are essentially just walking away from the assets and leaving them with the banks. So we see a bit of a target for a new business line there, just helping people with retail property. The office side, similar to the UK, again, there's a few deals being closed out. We're trying to ramp up our virtual viewing capacity as best we can, but clearly, decisions just aren't being taken. We've seen a few letting deals fall by the wayside, but there was a similarly a very low vacancy rate, so we don't envisage a huge amount of distress there. And similarly on the industrial side, that seems to have performed very well. Clearly there's an awful lot more demand. We still don't have a government in Ireland. We had an election just prior to the COVID crisis striking, so the government formation talks are rather on the back burner at the moment. But again, we've seen the pretty much the same range of supports that again we've taken advantage of to support staff salaries. We've obviously taken measures to cut costs as best we can, at the moment, fortunately, that is really just been focused on wage support schemes from the government, and certainly at director level, we've just had to take a bit of a hit. So, I mean, really, I think we're expecting to start to come out of this similar to the UK, sort of early June, but we wouldn't really expect to make any serious money until probably Q4.
Thanks,
that's
Ian.
the view from Ireland.
I was just looking at Miguel's question. I think just regarding the Fairbrother and what we're doing managing teams. We're using Microsoft Teams a lot. We're having lots of board meetings the last few weeks where we have just managing everything and trying to get on top of cash flow. We've reduced salaries as well across the board, and then just seeing where we get to. That's sort of, I touched on the other government help which we're looking at as well. But managing staff's hard when because we're all like working in teams, don't we? That's why we're in an office. So but bizarrely, the first, we've been in lockdown for 4 weeks or so. And it's been okay working from home, but I don't know how much more we can take it. But wait and see. Who else wants to have a crack at talking about the market? Mr. Kim, would you like to talk?
Yes. I lost my voice, but so please understand. Yeah, we are the only country that didn't shut down or block the country, right? So hello? Yes, and the business in Korea is going as usual. So, but we keep maintaining social distancing policy, but the property management is going well, but the leasing is going slow and transaction too. So actually, real estate industry in Korea is not so impacted by the pandemic. So, but we are refraining from holding seminar or conference. But I hope starting from May, we are allowed to hold that kind of gathering. And my worry is that the cross-border investment will be very limited. So right before the pandemic outbreak, I was about to sign, the transaction contract together with the U.S. partner, the New York, Hemsley. We are working with Hemsley and 10 million multifamily project was about to sign a contract, but because of the pandemic, the contract was stopped. So, and other industry like airline and travel agency and hospitality, they closed all office. So many travel agents filed for bankruptcy, and even big airline companies lay off, temporarily about 70% of employees. So, except for that, our business is not different than before. So.
Okay, thank you very much. That's I didn't realise that Korea was still open, essentially. So that's interesting. Where should we go? Rick, you ready?
Hi, everybody. Here's home office, the Netherlands. I think our market is quite similar to the UK and the Ireland markets. We are mostly working from home, although we're not in complete lockdown. Everybody is doing his best to keep the social distance rules. And I think it's working quite well, but it will take time to reopen everything again. And I think the main problem right now is the uncertainty in the market. When will business open again, and how? What will it look like? There's a big chance that the 6 feet distance rules will remain in business for maybe a year or maybe even 2 years. We don't know. So lots of businesses on hold. That's for investments, also for leasing, and we have to wait until the Dutch government decides to reopen some parts of the business again. I think all the hospitality, catering services, restaurants, bars, pubs are all closed, and I think they will stay closed for a while. Same goes for leisure, sports, those kinds of businesses. But we seem to be reopening some schools again within a few weeks, so that's a start. In our team, we are working from home, and it's working quite well. A lot of meetings on the Zoom platform or on Microsoft Teams, and we're still working on the closing out of some deals we already started. So we hope to get to a completion this week of residential investment, and we are preparing for a reopening of the markets again. So we are working on the digitization of the processes, and well, be prepared to have a good second half year, or maybe Q4, and of course the next year as well. So that's I think that's about it. We didn't cut salaries. We do encourage our people to take up some days off these times, because everybody is postponing the holidays to the second half year, and well, we don't want that to happen. So we encourage everybody to take a few days off as well during the quarantine period. So I think that's about it, Charlie. You're still on mute, but
there we go. That's better.
Yeah.
Thank you. Sorry. Marina, would you like to have talk about your market?
Yeah, sure. So hello to everyone. So officially we mostly working from home from the beginning of the April. So before this, the big companies, they also mostly turned to work from home, because there are only 50 people can stay in one premises for one time. So from our side, we, as much as it's possible, move our work for home. So we do some meetings. We have some meetings also via Zoom. But in general, the market is very, very slow right now. So of course, we have all the malls and shopping centers, all the restaurants, everything is closed. So of course, retail is the segment that have hurt the most. And of course, all of the tenants are trying right now to renegotiate with their current landlords. Actually, we made some research, and in St. Petersburg, situation is a little bit better. It's more active. In Moscow, the situation is mostly more harder, because all the requirements from the government where you can go are more strict. But anyway, most of the tenants right now try to ask for some discounts for the lease, or some rent-free period, or they ask if they can make some payments later. Another segment is the companies that try to optimize their costs as much as it's possible. So they cut down all of the promises, the stuff, and try to find some small promises. We have enough active market on the warehouses. So in this case, I would agree with Alistair and with the guys from Dublin that industrial market is not so much touched. It's still better, but also going slow. And another tendency that we see is that a lot of people right now are waiting when the quarantine will be ended. So everybody will see in what condition they're coming back. And we guess that we will have an increase of the vacancy on the market, because in the beginning of the year, it was around like 5% average. And everybody was discussing, oh, well, what we're going to do, because we almost don't have a lot of vacancy on the market. So we guess that right now we will have the growth of the vacancy, and probably we will have the market of the tenant, because of course they will ask for lower prices for rent. Well, to anyway to have the cash flow for a landlord, better than have nothing. And also we have some clients who changed their mind, and if previously they were looking for rent, for lease, now they're waiting what will happen on the market to buy the premises, because they expect that the prices to buy also will go down. But of course they wait that it will be happen just right now, and they can buy it very cheap. But we guess that probably it will be happened at the end of the summer, in the beginning of the fall. So from the point of the salaries and managing of our teams, for these several months that we're mostly working from home, we offer it for the brokers some like step scheme where they have some part of the fixed salary, and also they keep their percent from the deal. Well, because anyway, our goal is to keep our team, but of course, a lot of companies, of course, they cut the staff, and the number of the people who lose their work is increasing very quickly, unfortunately. But we hope that at least in June, probably we'll return to the normal work. We're waiting actually today, probably today, the new speech of our president. Everybody expects what he will say about the timing, because for right now we have this quarantine to the end of the April, but a lot of people expecting that at least in Moscow and in St. Petersburg it will be continued till the end of the May, but we will see, because a lot of people also waiting what will happen. So these are the main points, I guess.
Well, thanks very much. Very interesting. So, very similar theme coming through here, isn't there? Max, do you want to have a talk about Germany?
Yeah, sure. So yeah, obviously on the leasing side, it's very quiet right now. The investment side is continuing. So we're still doing deals, obviously not as much as before. The strategy that we've tried to adopt is basically giving buyers more time to close, simply because the banks, they are still working, there's still capital, but they're not going to work as quickly as possible. So we're trying to bridge that by giving people more time to close transactions. And we're also, where we already see opportunities is where you can take over transactions. So again, to bridge the whole financing thing, where there's a financing already in place and where the investor just needs to replace the equity. So that kind of thing seems to work. When you have transactions where you need to get, totally new financing, it's just going to take too long, and it's unlikely to go through. So that's what we're doing there. In terms of rents and rent collection, it's been actually not so bad. So actually for April, even from the small stores, a lot of, retail stores, a lot of rent came in. So the government has done a plan where they give immediate help to businesses. immediate cash, which actually doesn't even need to be repaid. You repay it through your profits through tax at the end of the year. So that kept things going for now. And it seems as if the government is very active there and trying to support businesses. So, you know, the pain is maybe a little bit more delayed than in other markets with regards to that. I think obviously we're going to see, you know, with retail a whole repricing. So even if things open again, the yields are going to change for that, or hotels as well. The whole, you know, risk appetite in that asset class is going to be totally coming out. Other than that, yeah, I hope it ends soon. I think we have to remain optimistic. I mean, you know, the infrastructure is still there. Everything is there. So I think, you know, once we can turn back on the economy, I think things are gonna recover rather quickly. But I think it's only ultimately going to happen once we have the vaccine, obviously. So. Yeah, it's going to take some time, but then I think it's going to be rather quickly. I think other than that, everything as was mentioned, the same thing. So staying positive, we're trying to keep the staff as much as possible. We haven't done any layoffs, we haven't reduced any salaries, but we're of course looking very closely at costs. Yeah, and I think other than that, I think, yes, the agents are going to be much more in demand in the future. I totally agree with that. And I think also real estate is going to stay strong because one thing that's for sure that's going to come out of this is massive inflation. I mean, you see all the governments printing money like never before. I think that's a very good argument for real estate and for, you know, investing in real estate and staying in real estate. So, yeah, I think that's it.
Thanks, Max. It's all running theme. Should we go to Singapore? Ong, have you got any thoughts about your market, please?
Yeah, hi, Chunfa here. Well, I was late because our Prime Minister just made an announcement an hour ago to say that the lockdown is going to be extended for another month. Oh. So we're into 2 weeks, so that means we have another 6 more weeks to go. How has the market been affected? I think so far, well, because of social distancing, we can't go out. That has a huge impact on the transactions that we're doing because we can't do any inspections with our clients or have any meetings except through Zoom and other platforms. Well, as a company, Edmund Thai & Company, we have both the brokerage side as well as the professional services side. So in addition to our office, retail, industrial, residential, we also have our valuation, our property management, our facilities management, research and consulting. So what's happening at this time is the professional services are providing kind of the revenue stream, at least provide the bread and butter to pay some rents and the salaries, although the senior management has taken a salary cut this month. Yeah, so the Singapore government has also provided a lot of wage support scheme. Like for this month and next month, they provided to pay like 75% of the wage costs of workers earning up to 4,006 Sing dollar a month. So that's about US 3,000 a month. So I think that helps with the cash flow and then providing loans. So there continue to be some deals in the market. We have investors looking for opportunistic buys. Some are looking at the longer term. So it is very, very selective. And obviously there are also funds looking for fire sales, but so far there isn't any. The office market, I think, pretty resilient because we don't have a huge oversupply situation. In fact, supply is fairly limited. So that has kept the rents where it is. But we suspect that when when it's all over, we could see a consolidation in demand in the co-working space. Tech and finance has been, I think, one of the drivers, tech and co-working space actually. So I think that's going to be under some pressure, although the tech guys are still expanding, but very, very cautiously. Retail has been pretty badly hit because most of the malls are closed except for the essential services. The REITs, the real estate investment trusts, I think because of the covenants that are in place, I think the government is really reviewing that whole regime. So I think retail will be pretty badly hit, as well as hospitality. So some are like single digit occupancy now. But I think that's the same as in many, many other places. Our residential continue to be fairly resilient. I think it also has to do in some ways with the health system here, that the health system is fairly robust, but everything is slow, and we think it will only start to come back after the lockdown is over. But at this point in time, there's really no fire sale, and it's really a slow burn. Yeah. Thanks.
Great, thanks very much for that. I forgot to say earlier at the beginning of the meeting, and Bill just reminded on the chat that the meeting which we were going to have, which was following the SIOR meeting or before the SIOR meeting, which is being postponed till next year, ours will have to be postponed as well. So we will probably do it in Dublin following the SIOR one again. So we're just moving the meeting by a whole year, and then we'll do more and more of these virtual meetings as well. Hopefully, probably a lot more than we normally have done. Bill, do you want to talk now about France?
Okay. Yeah. Well, nice to see you all happy. We've I'll show you I've dressed up for you guys. I've brought in a few props here to show you I've been asked to look after this rusty tower, which I've been painting, so we're not all completely bored in the, in the confinement. Yeah, no, we've been in confinement since March 15th, and we've been told we get out of it on the 11th of May. So we're beginning to look at the other end of the auspices. I mean, I've been able to, as a value, I've been going around looking at buildings, and I've driven quite along around the Paris region. So there's actually quite a lot of activity on the roads. There's a good fair amount of French people still working, essential workers, get visits. So, I mean, personally not very affected so far. I mean, normally we spend time complaining about the French government, but it's when there's a recession like this that you rather wish you're glad you're not in America, because we have a lot more money, a lot more better health system, a lot of things that are out there for the very poor, because we are obviously going to go for massive 20% unemployment by the end of this when they pull the stumps on it. Very briefly, same things as you mentioned. We're affected by retail. We're finding that most people are debating as to whether they've given rent-free for the second quarter, or whether they've done rent-free and charges at the best, or whether they've gone for monthly payment or a deferred payment in the third quarter. The most significant thing is the share prices of the quoted sector in the retail. So you'll have followed that Unibail, Rodamco, Westfield dropped 70% and has come back up. It's 50% below net asset value. The worst affected, I think, is the Dutchman, Velderhav. If you believe in Dutch retail, buy Velderhav shares now. You could make a lot of money out of it. Also, other ones like Klépierre. But we've got the logistics world is seeming to go on further. We're involved on 2 deals at the moment where the client has decided, or as you say, he can't get the finance, but he's decided to go steaming ahead, try and close the deals, and there's not a hint of a price chip coming in. There's been a little bit of I've talked a little bit about Madison. So Madison, just out of interest, is now talking to a Korean fund called Mirai, and Mirai bought a nice office tower in La Défense, the Tour Majunga from Unibail, for 750 million about a year ago. And the idea was to syndicate that with Korean local investors already last year in September, there was about 20% unsold to Korean investors. So Madison, and what they do is they buy minority shares, but for a discount. They came along and asked to buy that share maybe with 80 pence in the pound. Mireille were insulted because they felt they should be paid 100%, the same price as they paid for the 20%. Anyway, Mireille have now come back to Madison in April and asked, would you still be interested in that 20% transaction? So it shows that the feeling out there of some of these incredible South Korean investment funds is not quite as solid as it appeared to be a little while ago. So all well here. I mean, no one's mentioned it again, but the postponement of MIPIM, which was meant to be the 12th of June, obviously no one's gone any further, but that will finally be cancelled, and they've tried to avoid cancelling it. There's about 150 million euros in income for the Reed Midham and for the city of Cannes, so it's quite a hit. Yeah.
So I was having a cup of tea then. Thanks, Bea. I know MIPIM, you know, that whole, they're missing so many events down there, so they're going to lose a huge amount of money, but it is what it is, isn't it? It's the same for everyone across the globe. Antonio, should we pop to Italy?
Yes. Basically, in Italy, we are all closed from formally from 9th of March. The government has given subsidies to all the companies. On the real estate sectors, still we are waiting. I mean, the brokerage is totally stopped. We just have a call with the Lidl yesterday or 2 days ago. They confirm the plans to open. We have 2 deals that we do. We have supposed to do in May, July. They will do in December. So they not cancel the plan. That was my scare. Lidl, for who don't know, is a supermarket chain from Germany, basically. The office, I think, is the most critical stuff. We have managed 86 contract. Nobody has paid last month, so 86 contract, and nobody has paid. I mean, not all the contract was scheduled to pay last month, but so the second, in the next month we will see who pay, but we receive at least 10 letters to asking for a rebate, or sometimes to rebate, sometimes to make a rescheduling. The big problem is that the government does not make any rules about any rules between landlords and tenant. So basically, the landlord say, I don't give you any rebate. I'm not open to give you anything. And the other say, okay, I go away and you keep your like your property and good luck. So this is basically the starting of the conversation. Usually they find an agreement. That's it. We worked on the services side. I was surprised also how much, because, for example, maybe we're involved to make a huge valuation in a ice scraper in New York. My first time in life that I am engaged by a huge fund from Italy to make a valuation in New York. And so I make some penny in the last months in the advisory, and all the management is still there. But also I think I'm not scared now. I don't have any scare in this month, My scare is in September, October, when also the management companies start to have problems, and then maybe will ask me to have a rebate in my contract. So in this moment, they don't ask me any rebate, but I'm sure that they will come to me when they know how much losses they have. So in this moment, I have no any problem. The only problem is that I'm the only one in the office because I have all the building by myself. I can play, I can make movie. So it's a nice situation. Drink beer. I smoke a kind of pipe. I don't know. I bought it in Russia, so I started to smoke shisha. I smoked 1 kilo of coke of carbon per week. So if I so survive I died for smoking, but I'm okay.
Oh, very good. Well, stay healthy then. Crikey.
Thank you.
Thank you very much, Antonio. Morella, do you want to have a chat about the market?
Yes, of course. Hi, everybody. It's very good to see you, first of all. So briefly to tell you about Romania, we are still in lockdown and it is scheduled until the 14th of May. Unofficially, it seems like the government will not prolong the lock-in after this date. Not because we would not need it necessarily, but it seems like the economy is seen not to handle a bigger period of lockdown. There are many companies that are having difficulties already, probably, and there is a pressure on the government. In this period, they tried to come up with many instruments to help the business environment, and I know many multinationals have used such helping manners like technical unemployment, which is paid by the state in a percentage of 75%. And also they are coming now with some significant loans that are possible to be taken by companies with an interest rate which is subsidized by the state. The general feeling is that somehow the social distancing in Romania that was enforced very, very recently, since the beginning of March, they closed all schools. And 1 week or 2 weeks after, the companies followed working from home. So somehow this social distancing provided very good results till now. And the people are optimistic somehow that Romania has not been in a very unpleasant situation so far. However, you know that our Easter took place this last weekend. This is the third day of Easter in Romania, and everybody is concerned now how disciplined people were in the Easter period, and if we will have a big wave of infected people, which we will see in a kind of 2 weeks from now, probably. What we see in the market is that in this moment on our core business, which is the office leasing part, we have been doing transactions that were commenced before this crisis. Some of them got postponed, but others just went on. I remind you that 50% of our leasing market is somehow involving IT companies, and the IT field is pretty powerful and pretty okay to work from home. So they did not shook the market too powerfully. But there are concerns on the retail side. And what will happen with the residential segment? The general expectation is that to be a significant fall in there on the residential part and on the retail, as the population will be weakening the purchase power after this period. We are waiting to see what Germany will do and when they will restart the economy, because we have a significant number of companies that are automotive companies that are here in Romania, and if they will reopen the factories in order to provide the complete supply chain, then they will be the first probably to start. So the plan is that from the 14th of May, the economy to be gradually opened. Now speaking about us in ESOP, we are not very convinced that we will return on the 14th in the office. Most likely we will stay some other months still in working from home, which actually is not too bad on our field of activity. We just cannot coordinate the property tours, but we don't have too many clients in this period to visit properties with. The moment that this crisis came was not the worst for us. This beginning of year was for us kind of the best beginning of year that we ever had. So this helped us. Also, we have some consistent backups in place, so we are not concerned too much on relying on the state aids or something like this. But we are looking. Our opinion is that the decrease in economy in Romania's case will follow in the on a 6 months to 24 months period. So we are looking at 2 years from now with a significantly lower turnover, and we just have to be realistic and to try to see how we mingle with this. We want to use this opportunity for two strategic aspects. One is to put online a new website for our company, which the entire marketing department is now heavily working on. And for the broker side, we want to use this time for conducting proper dialogues for future with former clients. So just to try to, have some business development calls on the broker side until the market will actually become active. Kind of this is in us. If you have any questions, I'm here.
Thank you. Who haven't we spoken to? Daniel, Switzerland.
Sorry, just had to unmute there. Well, I think the first thing to come out of the COVID crisis lockdown is that my dog now has a criminal record. Because shortly after the lockdown in May, he was actually on that day when all stores and services were to lock down, he was taken to have his hair cut. And as the operator was still cutting dog's hair, the police came by and he was involved in a police raid and they took names. So that's the first thing, that's how it started out. And the same thing has been happening throughout. The police are on the streets. 3 friends of my son's, 3 boys were riding their bike. And the police, they gave them a warning because they were less than 2 meters distance between each other. So generally speaking, the Swiss are upholding what they need to do, and the police are around to make sure that it does happen. What that means in terms of real estate is that contracts generally are being upheld. I know that in a number of markets, there's a lot of work being done on the tenant and landlord side where tenants are seeking rent deferrals or rent abatements, and we've been involved in a part of that. Mostly though from large international companies where across their portfolio, they are trying to conserve cash and they're just saying, we're not paying our rent. Whereas generally the local Swiss businesses are still paying their rent. There's also government relief programs. It's very easy to get. You fill out a 1-page form and the government is there to provide you with money. Online sales generally are doing well. We're pursuing some existing transactions. The market generally is very slow, but as we see it, at least, the Swiss franc remains very strong. It still is an interesting market. There still is political stability because people do honor their obligations here. We think it will continue to be a very good inbound investment market. Doesn't seem to be any fire sales, but at least not yet. But still, it's certainly a slowdown in the market, but we perceive going forward that there will be great opportunity.
Great, thank you, Daniel. Ray, I think you're last.
I'm muted there. Okay. Well, it was interesting to learn that the government deemed real estate services as an essential service, and liquor store sales, government liquor store sales, is an essential service. But the municipalities, local governments all closed down their issuing building permits. So I can go to the liquor store, but I can't help a client get the building permit for the TI improvements in the office leases we did. So it leaves me time to sit home and drink. Rents, values, no substantial change at this point, but very little data. The bankers I've been talking to on the phone are busy helping clients with their lines of credit, but not issuing new financing on buildings. Appraisers, one well-respected local appraiser indicated to me he's thinking property values may slip about 10%. He's talking industrial properties with that. When I looked at the CoStar data going back for new listings, office, industrial, and sales over the last 30 days, there was basically just very little activity. So I guess what I'm finding is a lot of our time is talking to past tenants, as I had heard in the past from others there. Some of them are asking for some rent relief. Some landlords are looking at blend and extend, but a lot of tenants are paying the rent. Government programs, a lot of the tenants are busy looking at what government programs are eligible for, and just a few sort of individual pinpoints of information. One client is the largest importer across Canada of high-end kitchen appliances. His sales to developers went down, but the smudge line of toasters and small appliances, his online sales are up. A couple of trucking firms that we deal with, food and liquor volume is up, but other volume's down, so overall they're down. Largest air freight brokerage company in Canada, a fellow told me yesterday that we arranged their space, and he said that this past March was good, but April he's thinking he'll see a 30 to 40% slip in volume. One of the developers that had a large portfolio they were bidding on, it was pulled off the market. They made it to the second round of bidders, but it was pulled off the market because the seller decided that it would be too hard for the finalists to complete their due diligence. Some land we're dealing with is for seniors living development, and they're looking at going ahead if we can get all the details put together, simply because they said we work on a 10-year plan, and this isn't going to change our 10-year plan. So quite a mix of just trying to keep in touch with people, and interesting to, they're all working from home predominantly, although it's interesting, there is a fair bit of traffic on the highway. So we're just, everybody's just waiting to see how long this lasts before things can ease up and people can get back to work.
Yeah, thanks, Ray. Mason, Detroit, what's going on?
Hey, Charlie. Well, the best part of this pandemic is that I get to have these Zoom meetings and see my CORFAC friends more than once or twice a year. Well, Detroit is one of our hotspots in our country. We've had about 35,000 cases, over 2,000 deaths. And as a result, our whole state is on lockdown. I don't know if you've seen on the news, but we've had demonstrations at our Capitol. The government has really locked things down. So from a business standpoint, you know, there's not much going on. I think that the main play is just to hold out until we get back to some sense of normalcy. And for us in the real estate world, the unknown is what really kills us, and not knowing if we're going to open up May 1st or June 1st or May 15th. And then when we do open up, what does that mean? It really paralyzes any kind of decision making, and that's what we're seeing. So our approach has been to buy time with a lot of these deals, and a lot of our clients are looking at it that way as well. Any sales that we have, we're extending due diligence periods. You know, we had a very strong economy a matter of 3 weeks ago. So, you know, we like to think that the fundamentals are there for when we do come out of this. We're going to have some gradual bounce back, but just trying to stay positive and looking forward to getting back to work. That's for sure.
Great, thanks, Mason. Is there any other questions, guys, or anything you want to cover? There's one thing for me is that what we've seen from the CORFAC HQ doing the breakdown of meetings and talking about investment and so on, I think because of the timelines we've got across the whole, you know, from Australia all the way through to Canada, we need to sort of break up into maybe European ones and so on, and you know, Asian ones, whatever it might be. So I'll try and organise those, and we can set them up to be, say, investment office or tenant rep, whatever they may be. So if you see any notifications, just accept them or decline or comment, and we can rejig them when we can. Any other questions from anyone? Pardon me. I'll take that as a no then. Thank you very much for coming in, and we'll see you very soon. That's probably the best thing to do. Thank you, Christy, setting it up.
Thanks, Charlie.
Nice. Good.
Thanks, Charlie.
Thank you.
Thank you.
Thank you. Bye-bye.
Bye.
See you guys.
Bye bye.
Bye.